Good morning, everybody. We've got a mixed to higher trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. March corn futures up 4 cents at 5.80 3/4. January soybeans up 11 3/4 at 12.56. March Chicago wheat is down a half cent at 8.14 1/2. March Kansas City wheat down 3 cents at 8.39 1/4. March spring wheat down 1 1/2 at 10.41. If you guys are listening on the podcast, appreciate it. Leave me a rating or a review. If you're watching on YouTube, hit that subscribe button and like these videos. Help me out to grow this channel. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. Check out my subscription service, guys. $49.99 a month. A ton of information direct from me. Morning email, text message service, subscriber-only videos and content. This stuff is sent out every day. You'll get all of my recommendations when it comes to the marketing of corn, soybeans, wheat, cash sales, roll targets, all sorts of different things with options. This is a monthly subscription. It can be canceled at any time. There is no other fee, no other obligation, and I will not try to sell you anything else. Check this deal out this weekend, guys. We've had a nice little recovery in the grain markets from the early week lows. So the corn market in the March futures contract has rallied back, 15 cents from Tuesday's low. The January soybean contract has rallied back about 35 cents from Tuesday's low. And the March Kansas City wheat contract has rallied back about 25 cents from Tuesday's low. So the action here could have been much worse. And we've recovered along with what's happened in some of the outside markets. You know, the stock market's recovered. We've seen crude oil recovered to some extent. So this week could have been a lot worse. And of course, this new COVID variant was kind of the catalyst for that sell-off. But I'd say the action this week, given everything that's taken place, has been okay. Now, we had an export sales report out yesterday from USDA, and the numbers were not good at all. Last week was especially poor for wheat. Wheat export sales for the week, a marketing year low of about 80,000 metric tons. Weekly corn sales were down 29% on the week. Weekly soybean sales down 32% on the week and down 29% from their 4-week average. There's some reports suggesting that China is looking elsewhere. China's bought some cargoes of Ukrainian corn. They've bought some cargoes of Brazilian beans. Now, they're still buying from the U.S., but in general, the export situation is really not that great. Now, when you look at accumulated sales for the marketing year, and I try to update you guys on this every week. Accumulated corn sales for the marketing year are down 7.5% versus the same period last year. USDA projects that corn exports will decline by only 9%. Some people believe that corn exports could actually, the USDA's export projection may actually come up in future reports marginally. So we're about where we need to be in regard to corn. Soybeans are the big problem here. Soybean sales accumulated for the current marketing year are down 29% versus the same period last year. USDA projects that exports will decline by only 9.5%. So if you're watching on YouTube here, this green line is last year. It was a record pace of sales, and this year we're just kind of a run-of-the-mill average program, 29% below last year's record pace. So because we're so far below last year's pace, and because USDA is only projecting, again, a 9.5% decline year over year, granted, we've got a long way to go in the marketing year, but the soybean export window for the U.S. is closing. I mean, by February, our window is kind of done, assuming that Brazil's crop is as big as anticipated. So next week, I believe on the 9th, we have our crop production report. USDA is in all likelihood going to come down with that soybean export estimate. How quickly do they come down? Do they do it all in one report? Do they do it gradually? I'm not sure, but that number needs to come down. Accumulated wheat sales for the marketing year are also kind of problematic. They are down 23% versus the same period last year. USDA is projecting that exports in wheat will decline by only 13%. So you've got some problems in wheat as well. USDA did report some flash sales of soybeans yesterday, 130,000 to China, an additional 164,000 to an unknown destination. So that's a total of 294,000, or about 11 million bushels yesterday. Trade chatter continues to suggest that China may be in for some more U.S. beans, say between now and the end of the year, or maybe between now and the end of January. And we very much need to see that, given what I just told you about the export situation. OPEC will go ahead and hike oil production by 400,000 barrels per day in January. Prior to this decision, and I talked about this yesterday in the morning, there was a lot of speculation that OPEC may not increase production, or maybe they wouldn't increase production by such an amount that it may be reduced because of the COVID issue, because of the stockpile release from the U.S. and from other countries, but they went ahead and they're going to do it. They did say, however, OPEC said that they would make immediate adjustments should market conditions shift. And what that means is that if crude oil gets cheap enough, they're going to stop pumping, and that will be the case. But the oil market actually acted very well yesterday. The nearby January futures contract spiked down to 62.43 per barrel, then closed the day higher. It's trading about 68 this morning. So we've seen a nice recovery. So perhaps this bearish OPEC news was enough to put at least a short-term bottom in the crude oil market. This new COVID variant is traveling quickly. They've already found it in several states, including New York, California, Hawaii, Minnesota, and Colorado, and I'm sure there will be several more by the end of the day today. Clearly no containing this variant, as was the case with the variants before it. The Biden administration laid out a new plan to combat this variant yesterday. It includes encouraging booster shots for all adults, expanding testing availability, improved affordability, all that stuff. There are some reports that have suggested that the variant is highly transmissible, but perhaps not as dangerous as its predecessors. So we're going to need more data here. And as I've discussed before, this thing isn't going to end, guys. We're going to see more variants every few weeks or few months or whatever, and how the responses change, I don't really know. The policy at this point is probably a bigger deal than the new variants themselves. We may see finally some new biofuel proposals from the U.S. government any day now. Reuters is reporting that this stuff is forthcoming, but they've reported that before and we've never seen it. The Biden administration has delayed the decision on 2021 blending obligations by more than a year. They've missed the deadline to finalize 2022 obligations, which was this past week. The delays come amid several things. I mean, your COVID-related fuel issues. They've got other legislation on the table. I'm sure there's a whole bunch of lobbying going on behind closed doors. You know, you've got the corn lobby, you've got the oil lobby, a lot of moving parts here. The general theme here, the EPA or EPA sources have told Senate offices to expect retroactively lower volumes for 2020 and also 2021, and then higher volumes for 2022. So you may see some news regarding biofuels today. That could be a market mover depending on exactly what they say. Cattle market acted very, very well yesterday. Another good close. Cash cattle's been good this week too. Wide range, 137, 138, all the way up to 142 or a little bit better than that. I think most of the business has been above 142 this week. Feeder cattle market also very good, and your beef exports were good yesterday also. And the outside markets fairly quiet. U.S. dollars just marginally higher. The S&P's up 2 points. The Dow's up 8. Bonds up a little bit. Gold's up $10. Crude oil is now up $1.91 at 68.41. So that crude oil is almost $6 removed from yesterday's lows in that January WTI contract. Hey, everybody have a wonderful weekend. I will talk to you guys on Monday.